Take the question again, please.
Kofi, Kofi Bedu, a sole trader about business at 30th April 2019. Sales credit 230,050. Sales return 2,210. Debit 97,100. Purchasing 1,000. Carriage debit 70. Discount debit 2,840. Discount received credit 1,618. Rent received credit 7,400. Heat and light debit 3,810. General expenses 55,800. Motor expenses 6,200. Salaries 30,100. Bad debt written off 680. Allowance for doubtful debts credit 700. Drawings 22,500. Loan interest 1,200. 10% loan 13,000. Equipment 24,050. Accumulated depreciation for equipment 9,100. Motor vehicles 38,000. Accumulated depreciation for motor vehicles 24,020. Inventory at 1st May 2018 7,500. Receivables 37,250. Payables. Okay. Payables 8,940. Bank 7,420. Capital. So capital 40,000. Then summation 336,440 on both sides. Additional information. The following information is also relevant. Well, please, can you go a bit? Can you go up for me? Okay, it's okay. The following information is also relevant. The closing inventory as at 30th April 2019 was valued at 8,010 Ghana cedis. As at 30th April 2019, accrued rent income for the year amounted to 420 Ghana cedis. Heat and light accrued was 260 Ghana cedis, whilst salaries of 720 Ghana cedis was paid in advance. During the year, Kofi Bedu has withdrawn goods costing 720 cedis for his personal use. This has not been recorded in the accounts. New equipment costing 2,650 was purchased during the year, but had been mistakenly included in purchases. This is yet to be corrected. A check for 440 Ghana cedis received from a customer in full settlement of a debt of 450 had not yet been entered in the accounts. Allowance for doubtful debt is also to be maintained at 2% of receivables. VII. Depreciation is to be provided for as follows. Equipment 20% per annum using the straight line method. A full year's depreciation. A full year's depreciation is provided on all equipment held at 30th April 2019, regardless of the date of purchase. Motor vehicles 40% per annum using the reducing balance method. Required. Prepare a statement of profits or loss for Kofi Bedu for the year 30th April 2019. Prepare a statement of financial position for Kofi Bedu answered 30th April 2019. 20 marks.
All right. So thank you so much for your time and effort. I really appreciate. So, guys, just like I told you, you first read the requirement. If the question is given you, and then you write out the format. Now you leave the reading of the question to yourself. You get a pencil to be able to identify where each item of the question will go to. That is basically how best you can move faster. So sales, once you know you write sales, you know it's a revenue item. So it goes to the income statement. You need to deduce a short way of writing the income statement. So some of us would like to write I and E. Okay. I don't know how many of you know what I'm just trying to talk about. Income and expenditure. So someone like me, income and expenditure, I'll do IEA. But since it's a revenue item, I will not bother myself writing this. So whatever you would do to recognize it faster, you do it. So this is revenue, rev. This is also revenue item, so rev. Purchases is a cost of sale item, so I write COS, cost of sales. Purchases return is also a cost of sales item, COS. Carriage outward. What did I tell you? The inward will be added, but this is an expense, so it's not a cost of sales item. It is an expenditure. So be mindful. If you go and buy it and then they are bringing it in for you, that is what we call carriage inwards. You are carrying the items into the firm, but then carriage outwards is going outside the firm. So it's going to go to your operating expenses. So you can write operating expenses. Discount allowed is also an expenditure item. So you write an expenditure item beside it. Okay. Discount received is other income received. So if you remember in the format that I gave you, I wrote other income. So other income. Rent received is also another other income. Okay. But then with all this thing, you are checking their positionings. Is it on the debit side or on the credit side? Once they are on the credit side, there are two or more items that you can find on the credit side. You'll find an income on the credit side. You find a liability on the credit side. And then you can also find equity on the credit side. So just at the credit side, you are looking out for three items, either an income, a liability, or equity. So you should know what is there. And when you come to the debit side, it is just an expense and then an asset. An expense and assets. Okay. Are you with me? Are you with me?
Yes, please.
Okay. If you are with me, that is fine. So heat is on the debit side. I don't need to be telling you debits. That is why I'm just writing expenses because I know they're on the debit side. So this is an expense. This is also an expense. General expense is an expense. Motor expense. Please be careful. It is not motor vehicle. It is not an asset. It says motor expense, which is an expenditure item, a revenue expense item. Salaries is also revenue expense item. Bad debt is also an expense item. How about allowance for bad debt? It's on the credit side. So what would you say? Now that is not an expense item, neither is it a revenue item. Okay. Now you put an asterisk here because there will be a footnote to justify it. Now the footnote will determine whether this thing will be an income or it will be just an expense. Now you have made provisions, exact provisions of 700,000. Were you able to incur or were you able to adjust your provisions? Yes, if you read part of the question which I read here, allowance for doubtful debt is to be maintained at 2% of receivables. So you need to first determine your receivables and then find 2% of the receivables and compare to this. If whatever you have here is lesser than this one, it means that there's a surplus. you are just going to lower your revenue item. So you're going to take it to the income aspect, other income aspect, and then vice versa will be sent to the expenditure item. All right. So we are still going. Drawings is an expense item. At the same time, it will go to my equity. So expense and equity, depending on the information given me. Okay. Loan interest. This is also an expense. This is the finance cost I was talking about. Then the loan figure itself is on the credit side, which is a liability. So liabs. Equipment is an asset. So we prepare PPE. So an asset. This is supposed to be on the PPE schedule. You see the accumulated depreciation aspect of it. These are supposed to be on the PPE schedules. So I'll use this time to teach you the PPE schedule from here. Okay, so this is also an asset. Inventory at 1st May 2018. What type of inventory is this, please? What type of inventory is this?
Opening inventory.
Inventory. Thank you. So
Opening inventory.
I am glad you know it. So it goes to cost of sales. Receivable is a non-current asset, right? It's a current asset, CA. Payables is a current liability, CL. Bank, we need to check where bank is. Is bank on the debit side or on the credit side? Where is bank? Debit side or credit side?
Debit side.
Debit side. So it makes it what?
It makes it an expense.
Hey,
It's
what are the
an
two things that you... It is what? Is it an asset or a liability?
Asset.
Thank you. Please, the one who said
It's an
it is.
asset.
Hey, please, it's on the debit side, though. I said if it's on the debit side, it's an asset.
Yeah.
If it's on the credit side, it's a liability.
Yes.
It's an overdraft.
It's a liability.
Overdraft is a liability.
Yes, and then overdraft means that when they state bank and then they don't put the bank on the debit side and they put the bank on the credit side, it means you have overdrawn from your bank account. So they will not write overdraft. You should know that it's an overdraft. So an overdraft is a liability. Hey, why Nekasa no? Is it that you didn't know or you are surprised? Or she was not referring to me? Hello?
She was not referring to me.
Please be talking because my network, I want to just be confirming some items. So, okay, so this is an asset, please. This is an asset.
Okay.
All right. And this goes to your equity, your capital. So it goes to the equity aspect of it. All right. So with this items that I've written here, if you go and write the same thing in your financial statement, you are not going to get it wrong. Okay. So if I go and quickly write them there, I'll not be wrong. So there are some items you can just pick and dump them, pick and dump them, pick and dump them. It is this item that you need to analyze them very well. The additional information. Now, every additional information will be treated twice. So I always advise students that, see, when it comes to this, if you don't know any footnote item, skip it. Don't waste your whole time in the examination hall when you can actually pass some entries that do not need any adjustment and will give you marks for free. Are you with me? Because there are some items that you can easily pass the entries and you don't need to really stress your head and you get a free mark for it. So why would you bother your head, stay at the class and then stress and stress and stress and stress and then you end up not doing anything at all? Okay. Now the first item, let's see how best you can analyze this. Now, once I say it's going to be treated twice, you should know that it is going to either be added to something or it is going to be less from something. And that is the meaning of what you are saying here. It could be plus or minus, it could be plus or plus, It could be minus or plus. Okay. So it could be any of these things. Either you would add and less, or you add and add, or you less and less, or any of the way it's going to come. You just need to understand it. Now, the first one is simple. Closing inventory at 30th April 2020 was valued at 810. All right. So what can you say about this? This will be treated in your cost of sales. At the same time, will be treated in your what? Asset. So you debit assets, and then you credit. Please, if you don't know debit asset, I just mean add it to assets. Asset has a debit balance already. So if I'm debiting asset, it means that I am adding it to it. And then I'll credit my cost of sales. It means that I'll less it. So if you don't understand this debit or credit, please, just go. I am saying that closing inventory must be added to your current asset and it must be less from cost of sales. Now, once I'm doing credit to cost of sales, it means that I'm expected to less it from cost of sales. So you use your pencil, you write your narration, debit, credit, or add to asset, less from cost of sales. So you know what you are doing. Then you come and analyze the next statement. It says, as at the end of the year, accrued rent, accrued. What is accrued? Accrued rent income for the year amounted to 420. Yes, anyone to analyze it?
Let me give it a try.
Okay. Is Joshua here?
So
No, go ahead. Sorry, go ahead.
in my understanding, it's rent income that is yet to be paid to the company. That's an income that we are expecting, but
Okay.
not yet paid.
Okay. So where would it go? You've not passed the entries. What are we adding it to, and what are we lessing it from? So it is rent that we are expecting, and then we have not received it. So it is what? Receivable.
Yeah.
Be mindful, the word was rent income. It could have said rent expenses, but it said rent income. Are you here? Can you hear me?
Yes, I can. I'm in a public transport.
Oh, not you
I
necessarily.
am unable to speak
I
much.
want to confirm if they all can hear me and they understand.
Yes, sir.
Yes,
Yes.
sir.
Okay. So I am saying that it is an income that needs to come to us and we have not received it yet. So it must go to our balance sheet or statement of financial position as receivable. Okay. So we'll debit receivable with this amount. And then we'll credit the rent received. Do we have rent received in the question? Yes. So we'll add it
Yes.
to this one. At the same time, go and add it to the receivable figure. So you can write add to receivable and add to rent received. Any question? The first one, just this one, rent income. That's what we have analyzed. And that the figure is 420. So in this receivable of about 37250, we need to go and add a 420 to it. And then in our rent of about 7400, you need to go and add our 420 to it. We'll solve it. Don't worry. So the next item, I'm just telling you how to analyze it. Heat and light, is it an expenses or what is it? A minute.
It's an expense.
How would it be treated? How would it be treated?
The debit expense and then credit payables.
Okay, so our brother is telling us we debit expenses and then we credit payables because we are supposed to pay it. Can you break it down for them? It means that we add it to what? Heat and light as an expense, right? It means that just go and add it to heat and light. So add it to heat and light, add it, and go and add it to payables. That is the meaning of the debit and credit. Are you guys following? Please, if you are lost, mention it too. Payable is a liability. We have not paid it. We have enjoyed it, and we are yet to make payment for it. So why don't we put it to the expense account that we have, and then also go and write it off to the liability? So that is what I'm telling you. Every item here must be treated twice. Please let me use the restroom. I'm coming. What we are just trying to analyze is that ask yourself that additional information given us here, was it a revenue item or was it an expenses? If it was an expense, was the expense incurred in advance or was the expense incurred in arrears? Okay. Okay. So the next question was that heat and light, it was accrued. It is an expense that you are owing, which is piling up, which you pay in the future. It means that it is a payable item and then also must affect the said expense head. Now, how about salaries? Look at the statement. It says, while salary of 720 was paid in advance, that is, you've made payment of the salary in advance. What are the accounts that are involved? This is
Salaries payable.
salaries and what? No, this is paid in advance. So this is not
Yeah.
So prepayment. And then when you look at prepayment, it was an asset. So what are we going to do? We are going to less this from our salaries because it was paid in advance and then sent to our asset account. Now, salary is an expenses account and it has been paid in excess. So what you need to do is to reduce it. And to reduce an expense item means you need to what? Credit it. So we're going to credit salaries. That is going to less salaries. And then we are going to add it to what? Prepayment. What's the name? Maza, I've been looking for you for years now. Where have you been?
Oh, I just come online.
Yes. So tell me, you said I'll be doing what?
You subtract it from the salaries.
And
That's the amount of 30,020. You come and credit it at the current asset account.
So you gotta put it in the current asset account. And
Yeah, that's the
prepayment.
720. Prepaid, yeah.
Prepaid. So we can put it right
Yeah.
under the prepaid too as well. Debit prepaid.
Yeah, the 720.
All right.
Yeah.
So we have analyzed the three items here. The first one was an income. And the income stated that they owe you. So once they owe you, you would receive it, but you've not received it yet. So treat it as you have received because we are preparing our financial statement both on the accrual basis and cash basis. Okay. We are using both the accrual and then the cash basis. So it's the cash basis says as and when you receive cash, you record it. The accrual basis is also saying that once you part away with the items and then you are expecting, just record it. So now that we are expecting this money, we need to record it as part of what we have received and what we are yet to receive. So we are done dealing with III, income yet to be received. Now, income yet to be received, we'll debit receivables and then we'll credit the income account. Then we come down to an expenses, which had been also piling up for us to make payment. So we are yet to make payment, which is a payable account and then the expense account. And then we have salaries, which is an expense account, which we have paid in advance. Now, if you have paid it in advance, then that means that you go to your prepayment as an asset, and then you also come to what you call your um, um, expense account and less it. Are we together? Okay. Any question on footnote number 2? Let's go to the number 3. It says that during the year, Bedu had withdrawn goods costing 720 for his personal use. So remember when we go to drawings, I told you something about drawings. I said that this drawings that we have would be affected. It would be affected because there is a 720 excess that have been withdrawn. So we debit withdrawings account. We go and add it to the drawings account, which is debiting the drawings account because we have withdrawn. And then we'll credit our capital account in the name of what? Drawing. Because is it crediting capital account?
No,
Debiting.
debit, no?
And so just like I told you, it's plus and plus, minus minus. So since you're adding it, you come and less it from let me see, less from capital account in the name of drawings. So if you go to the equity aspect of your account, go and less it from there. So you debit the draw, you add to drawings account in your expenses. Let me use that word here for you. Add to drawings account in your expenses, and then also go and less from your capital account in the name of drawings, because you have drawings, capital account actually has a credit balance, so you can't go and then add it back. You need to less it to reduce it. So these are the two accounts that will be affected in footnote number 2. And then we know
hello.
capital account is
Hello.
a balance sheet item, whereas drawings is an expenditure item in a profit or loss account. Yes, sir.
I don't know, but I thought that the goods withdrawn will be rather taken from the purchases, since
Okay.
it was goods what, and then when you come to drawings, it will be rather added to drawings.
No, sir.
Okay.
Because they are all income statement items here. But then drawings actually basically is drawings affect your capital. You've withdrawn from your capital. It's not goods. The fact they use goods here doesn't mean that you actually withdrawn goods. So you can take this drawing to the goods, but this is not drawings from goods. This is a drawing account, and then the drawings from your capital, because you are reducing your capital basically, because you're for your personal use and not for the company's use. Next question. Joshua, how you are?
Oh, me, Ade.
Come and
I'm
read that.
listening.
Come and read the IV and tell us what you do under the IV. IV, yes, tell us. New equipment costing 262,650 was purchased during the year, but had been mistakenly included in purchases. This is yet to be corrected. So what do you say we'll do to this one, Joseph? Joshua?
You better explain them. Explain now. In some places,
No.
I will come
Oh,
inside.
tell
You
me,
explain them.
where am I lessening it from and where am I adding it to? Let's go now.
You let it at the purchases. When you are working on the purchases, when you are doing the cost of sales,
So it wasn't meant to be in purchases, because this was what? An equipment. An equipment is an asset. And so we must less it from
yeah.
purchases and add it to the equipment. Are you with me? So we add to equipment, less from purchases. Add to equipment, less from purchases. Okay. People had joined and then they had slept off. Okay. So we add to equipment and less from purchases. Then the next one, which says that a check for 440 received from a customer in full settlement of debt of 450 had not yet been entered in the account. Now, what do we do here? Someone has given you a check and you have received this check. what are the accounts that would hit? It's going to hit your debtors account and then your bank account. Okay. So if you know your T account very well, if you know the T account very well, your debtor was owing you 450, and then he has brought you a check in full, meaning that you granted the person a discount. Okay. You granted the person a discount. So you have debit, bank, credit, debtor. Good. So you are receiving the money in your account and your debtor has a debit balance. Okay. So the debtor's name was not mentioned, but then let's see debtor. They basically have a debit balance, and this is your debit side. This is your credit side. And then the balance on the account, balance brought forward, was actually 450. And the person has settled you through bank in full of 440. Is the debit side matching the credit side? Is the debit side equal to the credit side?
So,
No. If it is not, you are the one taking money, and then the debtor has come to make full payment. It means that you have granted the debtor something we called discount, right? What form of discount did you grant him?
Allowed.
It is a discount allowed.
Don't allowed. Mm.
Of how much? 10. Okay.
10.
Also, teacher.
so you're going to add this back allowed figure.
So this discount allowed, you open a discount allowed account and go and add it. So you need to go and look for the discount allowed figure in the question, which was 2840, and we add a 10 to it to make it what? 2850. So you open a discount allowed. It is a debit account. Discount allowed is also an expense. So it has a debit balance of 2840. You pass the corresponding entry. What is the corresponding entry? Debtor. Every account must be recorded twice. So debtor of 10. At the end of the day, this becomes 2850. So your new discount allowed figure is now 2850. Okay. Okay. So this statement here actually had 3 items, more than 1 item in the account. Okay. So that is what I've explained here. We had bank. We had data. And then we also have what we call the discount allowed in the question. Okay. So it matches up there. But all the debtors figure in our question. Do we have the data in our question? They didn't mention a data in the question, right? So it will be part of receivables. It will be part of receivables. So our receivable account will be affected in the name of the debtor with that figure. All right. So let's go on. The next one says allowance for doubtful debt, 2% of receivables. So we'll go back to receivables again because a debtor figure is yet to be received. What are the items that is affecting receivable? Remember that there is a receivable here. There's an adjustment on receivable here. Is there any other adjustment on receivable again? So you need to go through the question and check if there is any other adjustment on receivable. If there are no adjustment on receivable, and I bring my receivable account, my receivable account is the same as the debtor account. But look at what happens in the receivable account. Okay. So you know it's receivable we are doing. Now, what is in the receivable account? The balance brought forward, and it's an asset. So balance brought forward. What was the balance on the account? Receivable 37250. 37250. Now, out of this, someone has come to pay up the whole figure. Okay. So in this receivable account is when you had maybe your bank of the 440. You had a bank of the 440. Is it 440 or 240? 440. 440 being
It's 450.
yes. Then you had your discount allowed. So instead of opening would have opened this one 10. So it sums up to the 450 discount allowed of 10. Now there is a receivable here that is meant to come in again, which is rent receivable. So you are yet to receive the rent. So if we receive it, it is going to go up. So rent receivable of about 420. Is there any adjustment again? So now what will be the new balance on receivable that we need to take to the balance sheet? Is there any other receivable again? Joshua. Joshua.
Governor,
Is that yes,
please,
please.
the bad debt rating of
What is it? Is it in a footnote? Do you have a footnote on that? Bad debt written off.
the trial and before we can check
Oh, that one is just an
the
expense item.
2% on the
That one is just an expenditure. It's not
so
it's
to
not going to
know.
affect it.
Okay.
It's an expense. It's a revenue expense. Okay. So what is the difference? 37250,420 should give me 37670. This was the balance carried down. Yeah, why are you guys sleeping? Hello? Hello?
7 to 20.
Please take it again, I beg you.
Hello?
Yes, take it again.
3, 3 7 to 20.
So this becomes the new receivable figure that needs to be sent to the balance sheet. But then it is on that receivable figure we are expected to charge the allowance of the doubtful debt. So if you don't do this and get it right, you can't charge your doubtful debt allowance. So what is 2% of that figure?
74.
Is that? Please take it again, I beg you. I didn't hear you. I'm not hearing you.
Thanks
Seven,
about the redemption.
it's Joshua here. You're not giving me
Hi,
figures.
Bernard.
Yes, I'm not hearing you guys. Oh.
It's 744.4. 2% on the balance carried down of the receivable. Hello?
Yes. Sorry. 744. I think I'm omitting something. I think I'm omitting something. I'm coming. I'll check it out. So this is 700,
Okay.
and this is 744.4. I think I'm missing out something.
Okay.
So that's why I was told if you want to the 2% on receivable, you first of all subtract the bad
Bad
debt
debt.
written off from the receivable amount before you charge the before you
Yes, I think I need to take out the bad debt. It needs to come to my debit side, credit side. Amen. Because I remember this figure very well from one of my solutions. 37250 450 plus 680 from 37670 times 2%. Even with that, I'm still not getting what I'm looking for.
Hello, Bernard.
I'm coming.
Bernard.
Yes, I'm coming.
Okay.
Yes, talk.
You are about to get the actual amount of receivables. The balance was 37250, and you bank of 440. Discount allowed of 10. You are not supposed to receive of 420. Oh.
The rent receivable.
It's not part. Oh.
There's a rent receivable. Okay. But there's a rent receivable.
It was rent received though. It was rent received per to your working on. You are not supposed to add the 420 to the rent received. Otherwise, you won't get the actual receipt. Because the was 700.
Yes, wait.
So initially you said
The
the rent
receivable
income
here.
will go to
The rent receivable here is a rent